welcome to the final recap of the year 2017. Let's take a look at what trends were doing and how trend following rewarded us this year. We really have to talk about reaping some rewards with this method in this trading year. The previous years, 2012 starting out, 2016, all the years in between as well, were not great trend following years. It didn't really matter what markets you were trading. The trends didn't really continue, it didn't really follow through, and you got a lot of stop outs. 2017 is different, definitely different. And what we want to see here is just on December 23rd today, looking back into all the month and seeing how the trends unfolded and where we were able to trade. And as you know, when you've been watching these recaps, that I'm always drawing these lines here, simply marking where we would enter, where the breakout occurs. And when we take a look back all of those months this year, we should be able to grasp a good idea on how trend following performed. You will always see this dashed blue line here, this video that shows you the beginning of the year. What you have here is the S&P index, and you can clearly see that this thing has continued in a trend very well on increased volume and making new momentum highs here. Even in December, this thing is still trading to the upside. We have all valid breakouts in the trend direction marked by the black lines. This is a stop that I marked for you when the price was here, but as you can see, it was never hit. And all the black lines on top of price are the breakout levels. And in this market, you can very well see that in our long-term trend following approach, we have been long this market even before 2017 started. We went long. Here was the fractal formed, and this is where we took it long. This is November 2016, and we are still holding this position. Our current stop is down here below this fractal, even though in this case, as the market is so parabolic above the moving averages, I'm willing to place my stop into the 2540 area and then let it just fiddle around and do its thing. But S&P, there's nothing that you can say about this other than this thing has been in an uptrend. It has actually made more than 17% of gains this year, and in our trend following approach, we were very well able to initiate 3 positions, all marked here, while this has unfolded, and we are very lucky as this continues on. We never know how long the trend goes and how much it's gonna go, but in this case here, we are looking at a pretty cool price chart that does not indicate any signs or any well, it doesn't show any indication that it wants to stop trending up, even though it has become parabolic right here on this 23rd of December. We do not have any indication that this is going to go down. When we take a look at the DAX index, we can see the blue line again here at the start of 2017, and also an overall price that went to the upside. We had long positions in the year 2017. They were coming in from 2016. The breakout was taken here. Trend moved up. We have our stop here, and we got stopped out in 2017 here in July. Then a new position was initiated down here, even though this is a trend continuation kind of trade that I did there. If you follow the basic approach, you would take this fractal and you would be long right now, just barely in profit as the market has come back a little bit. Your stop is right down here. Still, this market is in an uptrend, and it remains in an uptrend as well. The last couple of weeks are simply a consolidation. It still needs to hit this level below this fractal here, below what is that, about 12,800 just about, for us to have an uptrend, probably or possibly turning around, even though you would have to look at the monthly chart to really determine if your overall trend has turned, because you always want to trade in the direction of the overall trend. Right now in the DAX, we still have it going up, and this is where we have our position running as well. It's a long position with a stop, not in profit right now, but not too much loss either. So we just let this play out until the end of the trade, not the year, but the trade. This is up, as I said, in 2017. Pretty good trend to the upside. Profit taking took place, and no profit taking in the S&P. The UK in 2017, not quite as thankful as the indices we looked at previously. You do have a sort of an upwards tendency in this market, but the market doesn't stay above the balance zone. That means the moving averages here, it comes back into it, and we have a lack of momentum. I still have for you the divergences indicated right here with the black lines. Momentum divergence, you have higher price highs but lower momentum highs. And then of course you see the price coming back into the balance zone. We did have a breakout trade that started right here. This is where it was taken, and it went up until it got stopped out here. The ending on this, or for this week's trading, is quite interesting at 75.84. We do have an all-time high in the FTSE right here. The high of this candle just about 7,600, a little bit on top of it, and this would be a trade for us that we want to take in the long direction, since the market is simply following its overall trend. And as the other indices are going up, this one is doing the same thing. I do have a long position, a pending order in this market, and I'm definitely going to take it long if it takes that, and it probably will, maybe even next week, because we do have 1 week of trading left this year. But as you know, in the weekly trading or the long-term trend following, it's not going to make a difference just this 1 week. Now, one of the most important, or one of the craziest trades for me at least this year, was the Nikkei. The Nikkei is very interesting. I've showed you this many times, that it comes back out of a base that went on for 30 years. It hit its high at just below 40,000 in 1989, and ever since then it has been dropping. It was all the way down to, I think, 7,000, 8,000, and now we are coming out of this base. The red line that you can see here marked in this chart is the break of this base that went on for 30 years. When something comes out of a base or a correction that went on for 30 years, it will move quite a bit. It will either fail and not come out of it at all, just, you know, touching the level and then dropping back immediately, or it will move through it, maybe even in a trend fashion, and then continue much, much higher, because it is coming out of that base, and it will make new market structure moves to the upside. Market structure moves, some people would call it Elliott waves. Some people call it moving just from, you know, support level to the next resistance level. It doesn't matter, but there are some sort of market structure moves that we can always observe, and the momentum indicator helps us doing that, and you can find out all about it in my trend following approach explained video. Anyway, here in the Nikkei we can see this red line, which is the massive resistance at 21,100 that this market needed to break to really come out of this base and to be able to unfold a trend to the upside that goes on for years, which is a new bull market for the Nikkei index. And as we can see, this market actually has done this. The first breakouts occurred down here in this level. They were formed here and they were taken here. We took them and we stayed long all through this. It was really annoying. Very, very tough time here right at the beginning of the year, and then throughout the middle of the year. It hasn't been until the last quarter pretty much where the market really got going, momentum got going, and we see this moving to the upside. We are still long. We took, or I took some profits below this bar, as it occurred right on top of the massive resistance, and some weeks of sideways movement are not unexpected here. Therefore, I took some profits. The add-on positions are now out of this market. I'm still holding my long from all the way down here, and I'm still going to take it over into 2018, and I'm thinking I will probably be holding this for quite a while longer, as this market simply is in a minor correction, and it will probably keep on going to the upside. Therefore, a new fractal has been formed and will be taken with a pending order to buy this again as it keeps on moving higher. In 2017, if you play the system right, you have been long and it has been profitable. Even though compared to the S&P, this is not the most thankful trend. You get a lot of setbacks into the balance zone, you have a lot of corrections that go back quite a little bit, and you don't want to be too emotional during these times, thinking that all your gains will be lost. Stuff like this. You just gotta trade the system, and you have to believe your system. Now, that was the indices. Let's take a look at the euro dollar. Also here we have a start of 2017 mark, and the market has been up during this year. The problem with this chart is that the overall time frame is not up. When you are coming out of a downtrend like this, which takes a long time and moves quite a bit, what you get is an overall time frame, that means the monthly chart, that will be below the moving averages, which indicates a downtrend. And before you get a market in your favor for the long side, if you want to trade long, you will need a first initial move that will set up the overall time frame to be on top of these moving averages. And only after this you can be a little bit more confident that you get stable trends to the upside, as your overall time frame is actually giving the way for the price, and you're trading the weekly, so your monthly needs to be on top of the balance zone. And this movement here in the euro dollar was simply the movement that is responsible for this initial move, so that the overall time frame can be on top of the balance zone. So therefore, for me, this was not the greatest trade, even though it did go on for quite a while and you could make some profits here. I only had a small position in this, but it really gets interesting now, and for me at least, because now is the time that the monthly chart is on top of the balance zone and will move higher as it breaks out, most likely. That's my take. We will see as it continues. That's euro dollar. Let's stay with the euro and take a look at euro yen. Euro yen very much down in the beginning of the year, and then breaking out to the upside. We have 3 entries on this as well, and the overall time frame is going to the upside. The initial move was this one here. It has already done it before the euro dollar has done it, so we are moving to the upside on an overall time frame here as well. The last week is closing strong, in my opinion, just about just below these 3 fractals here, but it just shows you that even if you get 3 fractals, which means quite a lot of resistance in this zone, the market stays just about on top of the balance zone, and it will not go into a deeper correction. It will move higher. It takes time, all of these weeks here. It takes time, but the breakout will come, and as long as the market stays on top of these moving averages, you are in this uptrend, and it doesn't matter how long a situation like this might take. You just want to stay with it, and you just want to trade wherever it tells you to trade. So the euro yen tells us to stay long, and that's what we're gonna do. The same is true for the euro Swiss franc. We have a movement to the upside here as well. All of 2017 has been pretty thankful, even though there might not be too much momentum in this trade as of now, and not in the last couple of months, but we have been long. These are our entries, and we are holding this because it's long, you know, and it's long on the overall time frame on the monthly as well, and this is very thankful stuff to take into the new year. Euro yen, euro Swiss franc, we have the S&P, we have new opportunities maybe in the DAX, and Nikkei is still moving, so we have quite some stuff going on that could make 2018, at least for a couple of weeks or a couple of months, who knows, could make it really a nice year to start out at. Australian US dollar. I just mentioned on Twitter yesterday that I exited my shorts because this thing is just not moving anywhere, and 2017 has been like this in the Australian and also the New Zealand US dollar. You have your breakouts, long breakouts. I actually have not marked this. this would be the major breakout here, but price isn't able to stay above it, comes back down, moves back into this consolidation after the long downtrend, and you would actually assume that after these long breakouts fail, that the market continues lower, making a new low below those here, giving you a divergence. If we just remove this here, giving you a divergence, which would mean price is lower here compared to here, but the momentum over here will be deeper down than it will establish here. That's the theory. We will have to see if this unfolds. I exited my shorts because this market is closing inside the balance zone. I don't see any momentum getting going. I would be looking at further shorts, but you know, why waste your time with markets that have troubles getting going compared to stuff that is really moving nicely and continuing nicely and adding on in those markets. So definitely watching this, but not being too euphoric about it. Same is true in the New Zealand US dollar. We have also got a major breakout here. The market touched it, it wasn't even able to close above it, and now it's down. However, the short closes inside, or the price closes inside the balance zone, which makes the short lose quite a little bit of profit. The short was initiated here, and we have the same scenario going on as in the Australian. We would expect a lower price below here, and we would assume the momentum not to form a deeper bar chart than it did over here. We will see if that happens. Again, not too much of momentum, not too much stuff going on in this market. Let's take a look at gold. Gold also very boring, for me at least, in this year. Nothing happens. A lot of failed breakouts. We can see them all marked here. First one that failed, second one that failed, third that failed, long and short. Market is moving here, but doesn't continue, and now it seems to just be back into this huge side move. Now, depending on how long you've been watching my videos, we have been trading this market when it moves, and we want to always be with this market when it moves. Therefore, we enter here with minimal position sizes, simply to be there when this gets going. And we did this in the year 2016, and we wrote this up here, and we would still be thinking that a continuation of this initial move will follow. We just don't know when, and all of 2017 didn't prove to be fruitful in this regard, but the basic theory is still the same. You have your downtrend coming, it ends as you get massive divergence in here. Price is lower on this end than it is here, but the deep momentum hill is here, and over here you have almost no momentum going to the downside, even though price is lower. Then a up move continues after the downtrend seems to be over, and this is the movement that I was also mentioning in the euro dollar, that you have your price coming from one side to the other side of the balance zone, which means from the downside to the upside. And this is what happened in gold, and it's also what happened in silver. And now we are moving inside of this balance zone, or just on top of it, on the overall time frame, which is the monthly chart. Until we are able to break through this level that has been marked here by this really thick black line at about 1380, this is a side move. This is nothing for us as a trend trader. We don't want to get overly euphoric by every little bit of a breakout that this thing takes. By now, since it has failed so often, we really have our upper side move limitation, and this is it's lying at 1380, and when it breaks that, we are trading it long, but until then we're just going to watch this thing. Therefore, patience again plays a very big role in trading and making profits and not losing too much while the market is doing these things. You would rather go and focus on different markets and other markets that can help you out making a profit or two. For the final review, so to speak, of 2017, we want to take a look at some US dollar pairs here. US dollar yen, first of all, look at this market in 2017. As a long-term trend follower, what happened is that you went short first, you got stopped out, then you went long, and in my case, I'm still long this market, even though when you take a look, we do not have a lot of stuff happening to the upside. My stop is right below here. Don't see too much happening, don't see momentum, don't see anything on the horizon that would really take this out of its side movement. So we are kind of caught up here at the end of the year in this market. And it's also important to mention this, after having mentioned all the positions that are in profit, you gotta focus on your stuff that is at a loss, or you're carrying it over into the new year with a loss. These positions are the ones that should only be taken, or every position in fact should only be taken with minimal risk once you open them, because even the best setup can fail, and you never know when it fails and when it works. And here we can see that since nothing is coming together really, maybe this will fail and we will get stopped out. When we get stopped out, I don't even lose 1 percentage point of my entire account, because my risk management requires me to enter initial positions with very, very small risk, and only when I see the trend continuing I would be adding on. But all of 2017 has not been thankful for the trend trader, and it's not looking very good now either. The same is true for the US dollar Canadian. We even did get a breakout being hit here. This bar actually hit this breakout that I marked here, but now look at where we're closing, running right back down into the balance zone and not continuing to the upside. We have a stop right below the balance zone at this fractal, and if we get stopped out, so be it, you know. Minimal risk, it doesn't really matter. You have to be able to lose in order to be in the positions that will make you the big money. And these are the ones where you see, look, the trend is moving. Here is another signal to buy, so you buy more. And all of a sudden you have a big position running, and you have your trends really moving. Stuff that never gets going should never see too much risk on your side. A little bit more thankful than the US dollar yen was this downtrend here in the US dollar Canadian, but what you're really doing is you're trading in a correction, because you have your uptrend running, and then this is a correction. Taking a short in here worked out, you made a couple of points, but it is a correction. And still my opinion that this trend that has been going on all of these years here is simply still being corrected, and we're waiting for an upside breakout that will give us a new move, reaching those old highs, then doing the divergence here in the momentum indicator. But we're looking at weekly charts, and all of this stuff can really take a long time. And therefore, you just have to keep watching your markets, have a definitive list of which markets you want to be involved in, which suit you, and also where you can have where you can always establish an overview, that you always know what's going on in these markets, what kind of phase they are in. Are they running in a bull market like the indices, or are they correcting like we just saw in the US dollar Canadian? Very important stuff, because you got to be there when this opportunity comes to buy in. You might be waiting for a year, you might be waiting for a couple of months, but there's only this one time when you can actually take it up, when your position needs to be in there, and the market is going to hit your level, and you're going to go through with it and take your position. And when you're lucky, the market really unfolds and you can add on. So by looking at quite a lot of markets here all throughout, indices, commodities and forex, hopefully you can see that a long-term trend following approach can really make you nice profits, simply because the trends are running for so long. But you do need your patience, and you do need discipline to execute all of this, and it takes years, in my opinion, to be able to come up with the emotional state to pull this off, because it looks so easy in hindsight, but while the market is ticking, it is so easy to get distracted. There is so much going on in the media, and even in your charts when you check lower time frames and all this kind of stuff, that will distract you from what's really going on and what you really should be doing. Therefore, I can only recommend that you absolutely have a system that you trust, where you have nobody and nothing that will shake your doubt in whatever position is going on, and that you are able to achieve this kind of emotional state through meditation, through a diary, or through some sort of process in your trading that will really have profit and success as its main goal and priority, and you will work through whatever comes up to reach that, because trading really is like you have another job. It's not a hobby, and it's not something that you just do on the side when you feel like it. If you really want to make it here and get that money that you know is out there, this is, maybe it's even more than a job, because there is this huge component of the unknown involved. Very different to going to work and getting a paycheck every month, even though maybe you have been sick for a week and slept throughout half of your day, more or less, because you weren't productive enough. The market will not forgive you these kind of things. You always have to be on top of your game. You always have to be awake, and you always have to follow your system, have the patience, and be disciplined. Otherwise, you will not make it. And in order to do that continuously, again and again and again, you will need to practice. And practicing here doesn't just take, 3 months or a year. That's just not enough. If that was all it takes, then there would be a million people out there that are making money in the markets. But there are not many people out there that make this money. And as you can see, hopefully, with this update here for the entire year, the trends we are riding, the stuff that I've been talking about, if you are able to pull this off, if you are able to initiate the positions and add on and stop out when you're supposed to, you can really add to your income. Not just that, over the long term. Thanks very much for watching my stuff throughout the year. I enjoy making the videos. Hopefully you get something from them. Long-term trend following, very, very boring for most of the people, I guess. But that's where you make the money, It's really like you'd always got to do what nobody does. And long-term trend following is what nobody can do. Because they are not able to overcome the whole patience issue or whatever, I don't know. But if you are able to do that, you're off for an interesting ride, let's just say that. Alright, thanks again very much for watching my stuff. Hopefully you're still here in 2018. Let's see where all of our trends continue to go. We'll enjoy some profits here over the Christmas period that we've made. And I wish you a Merry Christmas and a Happy New Year. I see you soon.